first, let's proceed further with the other topics. So, the introduction of this paper, APM, started with the concept of what is strategy. For the strategy to be prepared, there are certain other concepts which have to be learned. That is, understand about the basic purpose why the organization is established. That is mission, then vision, then the different types of planning that are taken up in an organization. Then as part of the analysis, there are three different types of analysis, that is external, internal, and the stakeholder analysis. So we have discussed about the internal analysis, external analysis. As part of external analysis, we've learned about Porter's generic strategy, BCG, matrix, and then Porter's five forces. We will be discussing about that in detail as to how to answer a case study related to that after a while. Then the third analysis is stakeholder analysis. So there are different stakeholders in an connected to the organization, internally, externally connected stakeholders. So they have an expectation from the organization. Their expectation is about the information based on which they can take decisions. So they look at what type of information is provided. So because their interests are connected with the organization, so to be benefited for future and useful in decision making.
Excuse me, ma'am.
Yes, ma.
Can I admit Sonita? She's waiting in the. Oh.
I'm sorry.
This meeting is being recorded.
First time so many students have attended this class. Okay, so as part of stakeholder analysis, there is a model given by Menlo. Menlo explains about, what should be the strategy that has to be adopted in terms of dealing with the with different stakeholders. So there are internal stakeholders like the employees, management. We have connected stakeholders like the suppliers, the buyers, the investors, etc. Then external stakeholders like government, then the general public. We have environmentalist groups, trade union, media. See, all of them are external stakeholders. So now here in this case, the model talks about what kind of a strategy has to be adopted to deal with stakeholders. So there are two variables which are taken. One is the stakeholder power. The other variable on the vertical axis is the probability of exercising power and level of interest. So if it is stakeholder power, on the left side we see it is low, and on the right side it is high. Okay, so if the stakeholder power is on the lower side, what is it? And then it is on the higher side. The second variable is sometimes some of the stakeholders are very interested, keen in understanding what is going on with the organization, the affairs of the organization. So their interest is, some of them are not interested with what's going on with the organization, not interested to interfere with the organization. So the level of interest is on the lower side, some of them, and it's on the higher side. So there is a matrix given which talks about if the stakeholder power is on the lower side, low, they are not very powerful. Basically, maybe they belong to a smaller group. If it is the same stakeholder, in some context we can see that they are stakeholder group. I mean to say, the stakeholder group, sometimes we see that they may be less powerful, or they may be more powerful. Let's say the customers, the many customers. So individually, each customer, if we look into that, they may not be having more power. But see, as a group, as the entire customer group as a whole, if they come together, they would be very high. I mean, the power would be very high. Let's say that the produce that is produced by the products that are produced by the manufacturer, by the seller, uh, major part of the products, like, they are purchased by few customers, so the customers group becomes very, very powerful. So on that, in that context, we can see that their power is very high. It depends from situation to situation whether they are powerful or not powerful, and combined with this, whether their interest is there. So sometimes some of them are not bothered as to what is going on with the organization. So if it is a combination of low power and low interest, now such stakeholders can be ignored. Okay, need not be worried about what would be the action taken by these stakeholders. Then we see that if the stakeholders power is low but their level of interest is high, see, as such, by themselves they may not be able to do anything because their power um, is low. That's the main point, that they are not very powerful, but they can influence someone who has power. Like, maybe they can approach the media, they can influence some stakeholder who is very powerful, like media can be there, investors could be there. So if that is the case, because their level of interest is high, so then level of interest or their probability of exercising power, so they want to interfere with the affairs of the organization, or some action to be taken against the organization. In that case, see, whatever they are seeking, keep them informed. See, whatever information they are looking at, whatever they are seeking, provide that to them, provide that kind of information. Okay, they themselves have little power but very interested and can have strong influence on other groups. On the other hand, the very basic fact that they are powerful, their power is high, these stakeholders should be taken very seriously. Irrespective of whether they are interested, their level of interest is on the lower side, they are um, not very interested in interfering or influencing others, but basically they by themselves are powerful, so they have to be taken seriously. Okay, so keep them satisfied. See, whatever they are looking at, provide to them. So that satisfying the stakeholder becomes the primary objective here. Then we see that it's a combination of both of them are high. So then give them most of what they want, at least in the short term. So satisfying them is, see, the very basic fact that they are powerful, they should be kept satisfied. Now this group where both of them are high, they can be they are called as key players. So give them most of what they want. Satisfying them is very important. Like key players like investors, shareholders. See, any decision to withdraw their investment from the company will have an adverse impact on the organization. Therefore, see, the investors are powerful, and if they are not satisfied with the affairs of the organization, the next step what they do is they withdraw their investment. Once they withdraw their investment, shareholders start selling their shares, the price in the stock market also falls. So therefore, their satisfaction is the top priority, primary goal for the organization. So keep them satisfied. That is now, as such, there would be no question which on, I mean, exclusively, see, since it is case study pattern of examination, exclusively we may not have a separate case study. Chances are very less, but in the other case studies, one part of it could be about how to handle the stakeholders. So knowing that what is the combination of it, are they powerful or are they interested in exercising their power, so what kind of a strategy can be adopted. So the question can say that advise or suggest or something, then you should be able to suggest what is the attitude of the organization in terms of dealing with the stakeholders. then see, technically we don't have to get into in detail explanation about ethics and corporate social responsibility, because you have already done this in detail in SBL. So, but the title which is given about ethics, business ethics and corporate social responsibility highlights the fact that, see, if anything related to these areas, if they are covered in the examination, you should be able to answer that. But right now, to be explanation wise, we will not be getting into the intricacies of what are business ethics, what are the principles of business ethics, and what has to be done. So um, now you have to understand that, yes, if there is something about ethical issues or ethical aspect, or any kind of an unethical practices going on in the organization, you, I mean, we should give an answer in such a way that you understand, you have perfect knowledge about the business ethics, and you are addressing those things accordingly here in this particular situation. Corporate social responsibility, now why are we studying this as part of the stakeholder analysis is uh, among the many stakeholders, um, the the one who's given utmost importance and priority is the shareholders. So shareholders wealth maximization is the objective of the organization. So every possible effort and measures are taken to ensure that the stakeholder shareholders wealth is maximized and they are satisfied. But then we have looked into that there are many other types of stakeholders, it's just not the shareholders. So their benefit also has to be looked into. So corporate social responsibility basically focuses on providing benefit to the other beneficiaries, see, apart from the shareholders. So considering the other stakeholders. So it could be the benefit of the employees or adding value to the customers, maintaining appropriate relationship with the suppliers, um, being prompt in terms of making the tax payments to the government, or in general providing some benefit to the society, general public, etc. So anything which extends benefit to other beneficiaries other than the shareholders. So that part of it is covered under corporate social responsibility, where the organization takes up the responsibility to provide certain benefits to the, maybe the society at large or a particular group of stakeholders. So that's all part of corporate social responsibility. Since you've already done that in detail, discussed that in detail in SPL, we won't be doing that. But any kind of a topic which is included, which touches upon corporate social responsibility, or where we have to address it accordingly, we will take up the case studies and then answer that. Since we've already done the pest analysis or pestle analysis, pest or pestle analysis talks about political, economic, social, technological. So, so those factors have to be taken into consideration. Economic factors, it talks about the impact of macroeconomic policy on business. So, see, anything what is going on in the economy has also to be considered. It talks about influences level of aggregate demand. See, aggregate demand is the total demand present in the economy, which arises on account of the total production activity taken up in the economy, and these goods that are produced are consumed by the consumers in the economy, and on account of that there is employment which is generated. So that's a cycle which goes on. So what is the aggregate demand? So that talks about the productivity in the economy. It talks about the employment facilities that are provided on account of productive activities, etc. So if the government's encouragement is there, see, to increase the aggregate demand, we also see that there is a role of government, wherein government invests the amounts into the productivity activities. So the productive activities. So see, what is the scenario? So is it encouraging the scenario, is it encouraging for the manufacturers so to produce more? What is the role of the government, and what is the activity that is as such going on in the economy? um, if there is anything mentioned, so that part has to be registered in our mind as we are discussing about that. So maybe we can talk about that in terms of whether there is an opportunity present for them, or scenario is not so favorable in the economy. So maybe there is inflation, recession going on, or as such there is, maybe they are in the recovery stage, or stagflation, or inflation, or boom. See, those things also can have to be considered. So we cannot all in all situations talk about what are the opportunities or what is the situation present, but these factors, so what's going on in the economy, because the case studies touch upon multiple aspects of the organization, in which country it is located, what is the scenario in that particular country. So if at all, if they say any, if there is any mention about anything like that, we will also have to take into consideration that aspect, and then develop the answer. So it exhibits that yes, you are aware of how to deal with those issues. Okay. So demand for products and services then influences the cost of business sectors, because of the inflation rate, because of the fluctuations in the interest rates, because of the fluctuation in the currency rates, the tax rates, etc. See, what impact does it have? See, if it is a multinational economy where their units are present in multiple countries, then the difference in the tax rate can also have an impact on what kind of a decision they take. Do they continue producing in one country and then transfer the goods from one country to another country? How do they benefit? What impact does these difference in tax rates have on the profit of the economy, profit of the organization, etc.? So subtly it would be there, but there would be a mention. Once we take up these topics and include into the answer, those points fetch you good marks. So as part of what is the economic scenario, we need to focus on that. Then what is the role of the government regulations? So government regulations in terms of competition policy. So is the government encouraging, or is maybe encouraging the new businesses to establish their business units? Then any support from the government, or are there any kind of restrictions from the government, and in terms of competition, in terms of supply side policy? So is it the supply of the material, is it free supply, or freely they would be able to supply, or are there restrictions on that? See, activity, the productivity activity also depends on what is the supply that is present in the economy. Then anything concerning the um, issues with environmental impact. If there is impact of the pollution that is generated by an organization on the environment, so there are certain rules and regulations that the organization have to follow. Complying with those rules and regulations is a must. Then um, if there are non-renewable resources, see, renewable and non-renewable resources, see, the use of non-renewable resources, so sustainability plans, etc. So those things also will be considered here. So they have to have an idea about to what extent these regulations from the government side impact the business. Okay. So with that, we would end unit 1. See, the syllabus is divided into 5 units. See, 5 units, broad division. Of course, chapter wise there are 14 chapters, but then if it is divided into modules or units, there are 5 units. So the first unit is about strategic planning. So we've been doing one day I see one set of students, so I do the topic. Next day another set of students, then I again went back and then I covered that. So it's going on and on and on. We are still in unit 1 only. Out of the case study, so generally exclusive case studies from this section are benchmarking. So one case study we've done on benchmarking, so because that was an exclusive case study. Then we've done one last class, we've done one case study on Boston Consulting Group before last class. Last class, the response was very low. 2 students or 3 students were there. Nobody was responding. So I took class for 1 hour and then we ended the session there. So now we will take up one case study on Porter's 5 forces from the examination kit, exclusive case study on Porter's 5 forces. So we can discuss in detail. So with this, we can move forward to the next unit, that is risk analysis. So I'll take you to the, 1 second. I'll put you to the case study. One second, I'll just open the questions file. This is the question. Let's read through this from here. After that, we'll go to the Excel file and then answer this one. Did we do this case? Did we do? Last week, who was there? Afshan.
No, ma'am, we didn't complete this.
We just started. We just read through the case study, but we didn't. Okay. The case study says Stokeness Engineering's mission is to provide world-leading reduced emission, fuel-efficient products for the motor industry in order to optimize shareholder returns. Stokeness has existed for only 5 years and is owned by its management and venture capitalists. The management were all engineers who had been working on the basic research associated with new fuel technologies and saw the opportunity to commercialize their expertise. Stokeness is highly regarded in the industry for its advanced, efficient fuel cell designs. As a result, the VC is very eager to invest in Stokeness and have assisted by placing experienced managers into the business to aid the original engineering team. So there's some basic information about who started this and then who now, as of now, how is it being managed. So it was started 5 years ago with a group of engineers who had this mission to provide world leading reduced emission fuel efficient products for the motor industry. So industry wise, it is motor industry. In the motors, there are certain cells that are used or batteries that are used, which are the pollution that is generated from that or anything, the reduced emission fuel efficient products. So those kind of cells have to be placed into the engine so that these benefits can be achieved. So that is but so 5 years when these group of engineers, they visualized this particular concept, they wanted to start. Here we see that the management were all engineers who had been working on the basic research associated with the new fuel technologies and saw opportunity to commercialize their expertise. So then they started this one. So Stokeness is highly regarded in the industry for its advanced, efficient fuel cell designs. Now, as a result, the VCs were eager to invest in Stokeness. So, who are VCs? Who are VCs? Venture capitalists. So, see the question. If we look into the case study, the questions that are addressed are basically about Porter's 5 forces. So this is a Porter's 5 forces model. The primary focus area is about Porter's 5 forces, but subtly there are other topics which also can be included into the case study. Here, as part of that, we see that the role of VCs, who are VCs and what is their role, what is their expectation, etc. See the other issues with the involvement of VCs. It has to be there in our mind so that we can develop the answer. And in this particular question, also there's one question which is exclusively addressed about the venture capitalist issues. So assess the risk appetite of the venture capitalist and discuss how this might impact on the performance measurement at Stokeness. So as we read through the case, we should also be aware about what is the role VCs can play in an organization. So here it says that as a result, VCs were eager to invest in Stokeness and have assisted by placing experienced managers into the business to aid the original engineering team. So VC's involvement, this concept was designed or perceived by a group of engineers. VCs are investors who come forward to invest in certain projects which are risky. Conventionally, to acquire the funding is difficult. Banks or other financial institutions may not come forward to invest amount into such businesses or extend loans to such businesses because it is a new concept. The risk would be very high. So in such situations, the VC's involvement is what we see. So they come forward to invest in such risky businesses, but always at an expectation that they expect a share in the equity. So that part we have to be aware of that. Okay, so now we see that along with the group of engineers, the VCs are also involved in this. Okay. Then new product development, it says that Stokeness is developing hydrogen fuel cells for use in powering large motor vehicles such as buses and trucks. They will replace standard petrol diesel engines. The fuel cells have a clear advantage over these older technologies in having lower carbon dioxide, greenhouse gas emissions. The governments of many developed countries are keen to see such cuts in such emissions and are supportive of a variety of possible technological solutions to this issue, such as fuel cells, electrical batteries, and compressed natural gas. Apart from that, see, there is some information about what is the situation since this is a new concept, new product developed. So Stokeness is developing this, and they will replace standard petrol diesel engines. Then the fuel cells have a clear advantage because having lower carbon dioxide emissions. So government's encouragement is there. So that's one key point. What we can observe here is government in many developed countries are keen to include this particular or use this particular technology so that there would be less emission of pollution. So those things. We see one important aspect is the role of government is there, and they are encouraging. Next topic which is given is about the external business environment. So what's about external business environment? It says it takes 5 to 10 years to develop a viable product for sale in this motor market. There are a number of companies developing fuel cells, but Stokeness is believed to have a 2-year lead over them and to be only 3 years away from commercial launch. In terms of the time period which is required is it requires about 5 to 10 years to develop this particular product, and there are a number of companies also developing fuel cells, but over them Stokeness is believed to have a 2-year lead over them. So they are leaders in the market. See, though the entry of many players into the market is what we see, because there are a number of companies which are present there in the industry, but over all of them Stokeness has a 2 years lead over them, and they are very close to their launch. So when it takes 5 to 10 years and then they have a 2-year lead, plus they are only 3 years away from their commercial launch. So these points we have to highlight about to what extent they are strong over, they have a competitive advantage over their competitors. That part we have to focus and then highlight those aspects. Next, alternative power technologies like the hydrogen fuel cells would be fitted by the major international vehicle manufacturers into their vehicles for sale to their customers. The vehicle manufacturers will need to form a close partnership with any engine producer in order to make their technologies compatible, and this has already begun to happen, with 2 of the major manufacturers signing deals with other engine makers recently. So they cannot work in isolation. It is not that they can survive all by themselves. The present ecosystem or the organizations where how they are working, see, of late there is a realization that organizations are all interdependent. They cannot survive all by themselves. It is not what they produce and what they sell. For them to survive in the market, to manufacture and to sell these products in the market, there is dependence on others. They have to depend on that, and that is a realization by the organizations surviving in the ecosystem. Now for Stokeness also, Stokeness cannot say that they would produce these things and then um, vehicle manufacturers, they themselves will come forward, they buy that and then they will install these things into the engines, etc. See, that is not the scenario, that is not the situation. See, they have to work closely with the manufacturers right from the time when the engines are manufactured. At that time, these hydrogen fuel cells have to be fitted into the engines. So in that case, only when they have an agreement arrangement between themselves, so between them, about using the fuel cells which are produced by one organization, so they can fit those things into their engines, and they can also claim that yes, their engines are fuel efficient or less reduced emission engines, etc. So both of them need each other. So here that part is highlighted in this particular paragraph. It says that the vehicle manufacturers will need to form a close partnership with any engine producer in order to make the technologies compatible, and this has already begun to happen with two of the major manufacturers signing deals with other engine makers recently. Okay, so that acceptance of this new product, the way the engines are now manufactured, wherein they have these cells fitted into the engines, etc. So that kind of an realization is there that yes, they do require these kind of engines or hydrogen hydrogen fuel cells, less gas emitted cells, etc., engines, etc. So that scenario is what we can see already existing in the market. Then it says that a major problem which needs to be overcome with any of these new technologies is that there must be an infrastructure accessible to the end users for refueling their vehicles. As the petrol station chains do for petrol engine vehicles at present. So another point which is highlighted here is the problem of infrastructure of these new technologies is that there must be an infrastructure accessible to the end users for refueling their vehicles. So as of now, the vehicles all refuel their vehicles with at the petrol stations for petrol, diesel, gas, etc. So now such kind of a facility, now that unless and until that infrastructure is available, it is not useful or it is not accessible to the vehicle users. So that is one point which is highlighted as a limitation here, or some problem which arises by using these products. Then we see government's role. Governments have indicated their desire to support the development of such technologies to address environmental issues and to try to establish new high value industries in their jurisdiction. They may do this through tax breaks and investment to support the development of the refueling infrastructure. Okay. Government is encouraging the manufacturers to take up the production of these kind of products, and they are extending tax breaks and investment to support the development of refueling infrastructure. So sometimes government also comes forward and invest the amount into such kind of proposals. So we call that as government expenditure. So when they come forward, the activity will pick up and then it will speed up, and such infrastructure will be available to the users. They may do this through tax breaks and investment to support the development of the refueling infrastructure. Then we see production of Stokeness fuel cells uses a special membrane. Production of Stokeness fuel cells uses a special membrane which requires rare and expensive elements. Also, it has partnered with 2 other engineering firms to subcontract the production of certain components in the fuel cell. Stokeness has had to share much of its fuel cell design with these firms in order to overcome certain engineering difficulties. What does this paragraph highlight? It highlights the role of the supplier. The supplier, because they are using a special membrane, one second. Sorry. So here it says that there is a rare and a special material, expensive elements and rare and expensive elements used in the production of fuel cells. So now they are dependent on the supplier for this kind of rare material. So also it has partnered with 2 other engineering firms to subcontract the production of certain components in their fuel cell. Okay. Stokeness has had to share much of its fuel cell design with these firms in order to overcome certain engineering difficulties. So apart from depending on the supplier, apart from depending on the supplier for this rare kind of material, they have also considered outsourcing. So outsourcing some of their components. Also, it has partnered with 2 other engineering firms to subcontract the production of certain components in their fuel cells. Okay. The Stokeness has had to share much of its fuel cell design with these firms in order to overcome certain engineering difficulties. Also, there are a number of startup companies developing the other technologies mentioned above, as well as large existing diesel and petrol engine manufacturers who are constantly reducing the emissions from their existing engines. So there are a number of startup companies developing the other technologies. So we see that other technologies mentioned above, as well as large existing diesel and petrol engine manufacturers who are constantly reducing the emission from their existing engines. So we see that the role of new entrants is there. Number of startup companies are developing. So alternatives are there. So new startup companies are coming out with alternate other technologies. Alternate technologies is about the substitutes, the threat from the substitutes, as well as large existing diesel and petrol engine manufacturers who are constantly reducing the emission from their existing engines. The VCs have stressed the need to analyze competition and competitive advantage in order to understand how to make the business profitable in the long term. The chief executive officer of Stokeness wants to understand the external business environment and its effect on performance management. The first question is for 16 marks using Porter's 5 forces model. Assess the impact of the external business environment on the performance management of Stokeness and give a justified recommendation of one new performance measure for each of the force areas, 5 force areas of Stokeness. I've put this question in an Excel file. Let's move to the Excel file and then start answering this one. There are 5 forces. What are those 5 forces? When we look into the 5 forces, we see that the first force is force or threat from new entrants. Whether or not they are a threat is what we have to analyze. Then the threat of the existing competitors. So the competitive rivalry, to what extent there is rivalry among the competitors, is the second force. Third and fourth forces are the power of the buyers and the power of the suppliers. Fifth force is threat of substitutes. Okay, so each point by point, we will address this one, and to what extent is it a threat or not also we will be looking into. Threat of new entrants. So do we see that there is threat of new entrants? You have to participate. If we are doing a case study, see, 2 times I've read this question, so I want you to participate in the discussion. Do we see that there is threat of new entrants anywhere? Any point which is striking or strikes to you? Please confirm. Anyone listening to the class?
Yes, ma'am.
Okay. So any point where you feel that yes, there is threat from new entrants or no, or something like that? Is the government encouraging the businesses to come forward and start these kind of businesses or industries where they can manufacture these kind of cells? Do we see the role of government? Say something. You want me to give the
Yes,
answer?
yes, ma'am. The government they
Ah,
are encouraging, ma'am. Yeah.
yeah, they are encouraging. So
Yeah.
when government encourages, one point, when government encourages, the many units will be set up, many businesses, many firms in the industry, they come forward to establish. So yes, there is a threat from new entrants. One point what we highlight here is, I'll just write it very briefly. You explain in the examination when you are doing. The government is encouraging business units to establish and produce such fuel efficient, whatever is the explanation, fuel efficient, reduced emission batteries and cells. Yes, so on that note, yes, there is the threat from the new entrants. Any other point which is highlighted? Any other point which is striking, or you feel that yes, there is threat from the new entrants?
Time period.
Time period.
Uh,
Yes.
yeah, reason is that like developing this product, it will take time, and like as mentioned in the question, it will take 10 years to launch on
10
commercial
years
market.
to launch. Yes. So that could be a discouraging factor. Long time period is a factor which will not be interesting for many entrepreneurs. Write in detail, explain the point in detail, because I'm just discussing here. So you should convey the, but don't keep on repeating the same point and then write very lengthy answer, but very precisely, but express the meaning of that as simple as possible. So that way you can take it up. If you are talking about long time period, 2-3 lines, I think you can explain that, but don't again and again repeat the same point. So once one point is expressed, you will earn 1 mark. Let's say if they are divided as per point 1 mark, if it is, so 1 point once you write, you will score 1 mark. You repeat that n number of times also, you will not get any additional marks. It is not the length of the answer, it is the marking system will go based on how many points did you write, what points did you cover, valid points. So each valid point which is presented there will fetch you one mark. So whatever are the allotment of marks, so if we consider it to be as 1 mark, so that is how you will score marks in the examination. Okay. So we mentioned there are, government is encouraging business units to establish. Therefore, we see that yes, there is a threat in that aspect. But again, another important point here is the long time period, because to launch their product, it usually takes 5 to 10 years, which because they may not have that capability to exist in the market without earning any profit for such long period. Some of them may have that capability to survive even if there are no incomes generated, no profit realized also. They still can afford to invest in such kind of businesses and wait that long period. Some other entrepreneurs may not have that ability in the first place. So that factor is a discouraging factor. Yes. Okay. Anything else, if you come across, you let me know, I will fit it. So let's move forward. The second one is threat from the competitors. We need to discuss about the competitive rivalry. competitive rivalry, yes, there are many other businesses who have already entered into the market. That is one thing. We see that there are number of companies developing fuel cells, but Stokeness is believed to. Yes, we see that there is competition. There are many players. It's not that Stokeness is a monopoly there. There are many other units which are producing, many other businesses, companies that have come up with this concept. But okay, so the point here, we need to very clearly talk about many other companies are producing. So though there are many other companies producing such products, but Stokeness has a 2 years lead, 2-year lead, and close to the launch. And 3 years away from the launch of the product. So there's not so much of a threat which is present from the competitors. So there is competitive rivalry, yes, because other players are also there in the market, but we don't see that Stokeness has to feel that pressure about the competitors because they are leading. Okay, then whoever comes out first with their product can also think about ways in which they can um, secure their concept. Patents can be, they can apply for patents. Since their product will be recognized as the innovative product. Okay, so market also will start depending on them unless and until some other competitor comes out with really advanced features in their product. Unless and until then, the market now slowly starts depending on the engine manufacturers are their customers, because their engine in their engines these cells have to be fitted into that. So then once there is an agreement, once there is an MOU signed with the buyers or the manufacturers, for them the buyers are the manufacturers of the uh, automobile or the trucks and buses, etc. So once there are MOUs signed with that, the others will be left behind. Other competitors will be left behind. They can have a upper hold on the market. So that way, we don't see that there is so much of a threat present from the competitors. The main point here we can focus is, yes, they are leading the market. That's one thing. Stokeness can apply for patent rights. Okay, that will give a lead, that will give an advantage to Stokeness once they apply for patent rights. It does not, it will not become so easy for others to follow them or imitate their product. That is one advantage what they have. See, early agreements with the manufacturers. Okay, anything else if you can think about, you will just include into this one. See, after threat from competitors, then we see that there are two stakeholders. One is the buyers and the other one is the suppliers. So there are two stakeholders. So this, from the supplier's point of view, from the buyer's point of view. See, what is their power? Are they powerful that they can dictate terms to the business, or they are not so powerful? They do not have that bargaining power, they are not very powerful. So that part, and to what extent can they have an influence on the business, so that aspect we have to highlight. So let's anything in any order you can start. Power of suppliers, if you look into that. So suppliers are powerful. Why? Because there is a rare kind of a material which is used in their manufacturing. So there is some rare and expensive elements are used, so that makes the supplier powerful. Okay. Apart from the this material which they are taking from the suppliers, now they have also started outsourcing the manufacture of certain components. So they are also dependent on suppliers for the components are produced by other manufacturers and they are supplying these components, so their dependence, um, Stokeness is also dependent on other manufacturers for the components as they are outsourced. So in all sense, we see that yes, the suppliers are powerful. Okay, that is that's the point what has to be highlighted here. The suppliers do have the power. See, the issue about, so what's wrong with the outsourcing? There is nothing about see, it is basically to consider whether it is cost effective or not. Outsourcing would be taken up. So if the external supplier has better expertise and infrastructure to produce those kind of components, generally the external supplier will be charging a cost which is cheaper than if they manufacture, if they take up manufacturing, that it would be cheaper, therefore that is considered. So it is advantages, but there are certain disadvantages also associated with outsourcing. See, when they outsource, they have to share the details about how they are manufacturing their products. So the component has to fit it into their product. So the final product, whatever is the product which they are producing, for the component to be fitted into their main product, they will have to share the details about their product with the supplier, with the component supplier. So the confidentiality is lost. So what they are planning, what is the production, those aspects would be now have to be shared with outsiders. So outsiders, because their production, their uh, the concept, um, the engineering, the designing part of all of their product, all of that has to be shared with the suppliers. So if that is the situation, then that that could be a threat in other aspects, like um, see, as part of the suppliers and the buyers power, or to reduce that power, there is a concept called as integration, which I have also explained to you. See, in the supply chain, the business can go backward and integrate, that is acquire the resources, or make arrangement for the resources all by themselves, so that the dependence on supplier can be eliminated, or they can move forward and make their own arrangements to sell the products directly to the consumers, is forward integration. So here there is a threat of forward integration from the supplier side, because they are sharing their details with the supplier. The supplier will have a knowledge about how to take up these kind of manufacturing of these kind of products. There is always a threat from the suppliers end in terms of forward integration from their end. So that is one threat which is always present here in this particular, especially in this particular scenario, because now that they are dependent on other manufacturers to for the supply of components, this threat is present. Okay, so explain that. We can explain that as the product details are shared with the component suppliers, the threat of forward integration from the suppliers end is present. Then let's see if there is anything about suppliers. We can always come back and then include points. Power of buyers. Are the buyers powerful? Who are the buyers here for Stokeness? The buyers are the engine manufacturers. So the buyers are engine manufacturers. Are they powerful? That point we have to focus. See, um, see, the vehicle manufacturers, this paragraph starts, the alternative power technologies like the hydrogen fuel cells would be fitted by the major international vehicle manufacturers into their vehicles for sale to their customers. The vehicle manufacturers will need to form a close partnership with any engine producer in order to make their technologies compatible, and this has already begun to happen, with two of the major manufacturers signing deals with the other engine makers recently. So that's one point. Here we see what's the role of the buyers, the engine manufacturers. So from their end, do we see that they can we consider them to be powerful? Is there a threat from them? How powerful are they, and what terms and conditions do they have in terms of bargaining with them, with the cell manufacturers. So that has to be looked into. The arrangements, the two major manufacturers have signed already. Two manufacturers have signed deals with other engine makers recently. So which means that the acceptance has started. Acceptance from the side of buyers has started. So that will pick up the momentum. So yes, there is a positive sign from here because it's an innovative product. Whether it would be accepted well by the customers or not is the issue. Okay, that's one thing. We also have to understand here that because there is an initiation already taken, there are manufacturers coming forward to accept this thing. We see that yes, there is a positive sign from the end of the buyers. Yes, that is very good. Okay. Then like we have discussed about the forward integration from the side of the suppliers, the backward integration from the side of the buyers also we have to take into consideration. The buyers, now the engine manufacturers will thoroughly understand what's this concept, because they are not complementary, I mean they are not separated as complementary products, but they are integrated as one product. One cell has to be fitted into their engine. So they definitely would understand the design, the technology that is used in manufacturing all these things. So buyers can think about backward integration. They themselves very soon can start with their own manufacturing of these cells. So in that case, that is a threat. We see that yes, there is a threat. As of now, the threat may not be present, but very soon that threat may be come up because these cells have to be the cells that are produced by Stokeness and other businesses. They have to be fitted into the engines. The motor vehicle manufacturers will definitely get to understand the technology that is used. So the vehicle manufacturers will understand the technology and may consider, I'm writing it very briefly, you please explain it in the examination if a situation like this arises. Okay, so vehicle manufacturers may consider backward integration as they understand the technology very soon. Okay, so yes, there is a threat from the end of the buyers. So we have discussed about the four aspects. So we are left with the fifth one, threat of new entrants. Yes, government's role is there. On that note, it is a threat, but then again, it is discouraging because the time period is very long. From the competitors, we see that yes, Stokeness has a lead over various aspects. Then see, the threat can be removed when the Stokeness, because they are close to the launch, they can apply for patent rights so that other businesses cannot have this kind of technology used by them in their business. Then if they sign up these agreements with the motor manufacturers, so they can have a lead in terms of having the vehicle manufacturers as their loyal customers. Then suppliers, yes, they are powerful in the sense that there is a special kind of membrane used in the manufacturing of these cells. So they are dependent on this rare and expensive material on the suppliers. So suppliers are powerful. Suppliers can also think about forward integration in future. The business is also depending on other manufacturers for components. So the confidentiality is lost. So they very soon those manufacturers also can start manufacturing uh, these kind of hydrogen cells. Same is the situation with the buyers. Buyers also can think about manufacturing these kind of cells because um, the cells have to be installed or fitted into the vehicle engines. Therefore, they understand the technology and they can also come up with manufacturing of these kind of cells. Um, we see that yes, there is uh, the the life cycle. We can see that it has slowly moved from the introduction to the growth phase because they have started accepting these products. So encouragement is there from the buyer's side, but threat is always there in terms of backward integration. Substitutes, the threat from substitutes also has to be seen. Yes, there are alternative products. Threat of substitutes, if we look into threat of substitute, yes, there are alternative. Government's encouragement is there. Government has indicated their desire. Government has indicated their desire to support the development of such technologies to address environmental issues. So, threat of substitutes is there because alternative products. In the beginning of this particular uh, case study, also we have seen. Um, There are a number of startup companies developing the other technologies mentioned above, as well as large existing diesel and petrol engine manufacturers who are constantly reducing the emissions from their existing engines. So, alternative products are produced. The existing diesel and petrol engine manufacturers are also working on reducing the emission. Then petrol and diesel engine. Okay, so explain that. This has 16 marks. There are 5 areas, 5 courses. So 3 marks. Even if they are allotted, you write 3 points in under each thing. So you should be able to score 50 on 15. Overall, the way you have presented, etc., that will also fetch you few additional marks. So altogether, we can see that Porter's 5 courses. Out of 25, 16, so that is more than 50, 60, 70% of marks can be scored only by answering the concept. See, the case study has to be read 2-3 times. Unless and until we read that many number of times, there are many points included in the case. All of them may not, you may not be able to register all of them in one go. So jot down these points, make simple mention about these points, and then you can uh, explain that in detail, elaborate and explain that in detail. Okay. So point wise, if you start writing, I think for each point you will score point wise, you will score marks. Even if your answer is partially correct, also partial marks can be scored. That way, have clarity in what you are writing. Read it again and again and again. 2-3 times you may spend time to read through the question, and very clearly communication skills are very important. See, in the coming windows from September onwards, the amount of professional marks increased in APM exam. Earlier it was only for the 50 marks case study, 4 marks were allotted, but now the overall weightage of professional marks for the exams, it's increased to 20 marks out of 100. 20% weightage is for whether you have the ability to communicate it well, analyze, critical analysis, evaluate, explain, describe. See, these are the verbs which are whatever are asked here. Whether you have that those kind of skills, professional skills to present your answer, so that will be assessed. So you should learn how to read through the practice kit answers. What are the comments of the examiner? Read through that, then you will have an idea, you will have an understanding about how to present your answer effectively. Content wise, content is not much. You don't have to write pages and pages of answers. Computer based exam, the space that is provided to you on the screen, you will have to present your answer, but the style of presentation is all what matters there. Second bit, B bit, discuss how the problems of defining the market in measuring a market share apply to Stockholm. What are they basically talking about? What is market share? The concept of market share. See, last time when we've done the case study, we've learned about what's the market share. See, out of the total customers that are present, what percentage of customers are with the business? So that indicates the market share. See, there, of course, we have decided or defined that in terms of out of the total revenue generated from all the customers, what portion of the revenue did they earn? I think it was ENT, entertainment company, something. So in terms of revenue, what percentage of revenue is with them is what decides or defines the market share. Here in this case, we see that the market share would be defined in terms of how many customers, who are their customers. Vehicle manufacturers are their customers, and the vehicle manufacturers producing the vehicles and the number of vehicles into which this product has to be fitted will be deciding what is the market share, whether they were able to capture a major part of the market or not. So 4 marks are allotted to identify the problems of defining the market. See, first we need to understand how many vehicles are present, how many vehicles are manufactured and are being used at present. That's one aspect. Second aspect is how many new vehicles would be manufactured by all the vehicle manufacturers. So the new production has to be considered. Then understand among these new units that would be produced, how many of them will approach them. So first defining about what is the total production of engine of vehicles, motor vehicles, we need to first understand, assess that is one thing. Out of that, how many of them will approach them for their units, because there is an interdependence we have already discussed. these cells have to be fitted into their engine. So that compatibility is one aspect which has to be looked into. When the compatibility is assessed, then these the products which they are producing, these hydrogen fuel cells which they are using, into how many engines they can be very comfortably fitted into that. Knowing that is also a difficult task, because it is the information from the motor vehicle manufacturers, which is very difficult to acquire that. So on that note, it is difficult to identify the market share. That's one part. Okay. Second aspect of it is the present engines also, there could be a replacement, there could be some alternative adjustment done, and then then they can be made into a vehicle or an engine where it becomes compatible to use these sites. See, few years back, see, some, of course, for quite sometimes smart TVs are being used by consumers. They are buying smart TVs, but some of them also are now able to convert their ordinary television into a smart television. That technology is also available. So if such a facility is there, that the present vehicle manufacturers, if at all, if they want to use these cells, see how many of them would come forward, and what technology is available to make um, these products compatible with the old engines. Okay. Um, so deciding on that, defining that, identifying, assessing that is indeed a difficult task. So express these points. Maybe you express 2 points also, that will fetch you, because the question is little difficult to answer. It is not, we don't have the information there in the case study. Now you have to think about and come out with the answer to this one. So write the points there, point by point. You will score marks, and then 4 marks are allotted. The last bit says that assess the risk appetite of the venture capitalist. Now, see, first paragraph we've looked into about what is the uh, who are managing the affairs of Stokeness Engineering. See, initially, though it was started with a group of engineers, but later on VCs also joined. So now VCs are the first paragraph says. As a result, the VCs were eager to invest in Stokeness and have assisted by placing experienced managers. So there is a loss of control. Experienced managers into the business to aid the original engineering team. So the concept was perceived by the engineers, group of engineers. So they have developed this particular product. So they have the control over the product, the details about how it would be manufactured, etc. All that they will have that ultimate control. But now VCs have placed certain experienced managers. Yes, they are experienced, but the ultimate control over their business is lost by the engineers. Yes, that is the major thing. See, when we talk about the limitations of employing or using the services of VCs, VCs have an expectation that a percentage of profits have to be shared. So a percentage of equity will be lost whenever VCs invest their amount into the new concepts and new businesses, new innovations. So they will lose a share of the profits. They will lose a share of control over the business affairs. That's another part. Last paragraph is also once again discussing about the role of VCs. The VCs have stressed the need to analyze competition and competitive advantage in order to understand how to make the business profitable in the long term. The CEO of Stokeness wants to understand the external business environment and its effects on performance management. Yes, they want to commercialize it. Therefore, they have encouraged VCs to join. But in this process of commercializing and maximizing their profit, see, there may be certain adjustments to be done. The control over the businesses would be lost by the engineers. Some adjustments have to be done. So on that note, um, we can see this to be as a limitation. We are asked here about assess the risk appetite of the venture capitalist and discuss how this might impact on the performance measurement at Stockness. Risk appetite, see, they have the very basic concept about VCs when we discuss. Their risk appetite is high. That's why they come forward to invest in such risky investment proposals. See, whether this product will be acceptable or not is not sure. The time period is here in this particular case. The time period is very long. They still are willing to wait for that long period with the hope that when the profits are made, they will have a share in the profits. So that is the kind of appetite here in this particular scenario we see. Otherwise, also VCs definitely have high risk appetite and they come forward to invest in the business. But as against that initiation to invest in this business, they expect a share in the equity. Fine. There is also loss of control already just now we've discussed. When there is loss of control over the affairs of the business, some adjustments, some compromises have to be made by the engineers at Stokeness that can have an impact on the performance of Stokeness. Yes, because Stokeness engineers want this particular concept to be commercialized and make profits. In that way, that would be a help to them because they are experienced managers. They can share their experience, expertise with them. Commercializing becomes easy, but control would be lost. Some adjustments have to be made. Maybe they have to compromise with the quality and other aspects. So those are the issues which have to be highlighted. And this will be 5 marks. I hope it is clear. I made it clear and you understood, provided you are listening to me. That's another aspect of it also, along with that. Did you understand?
Yes, ma'am.
Yes, ma'am.
Then in that case, we'll go back to the PPT, take up the next topic. Second unit is impact of risk and uncertainty on organizational performance. See, lengthwise, this particular unit is not very lengthy. All what the students have learned in PM with respect to risk and uncertainty, the content is the same. There's no difference in the content. Same concept, same topic, same things are discussed there, are discussed here as well. But the presentation part of it, see, there it was not a very lengthy case studies, simple concepts, simple presentation. Questions also were not very difficult, straightforward questions, or in terms of numerical questions, how they have to be taken up, etc. Okay, that was not very difficult. Here, presentation wise, they will have to be answered as case studies. That's the only difference. Concept wise, the same concept what we have learned there in PM. See what the students would learn in PM. Same is the coverage, the extent of the topics that are covered here as well in APM. Okay. All of them are dealt in PM. So we have the same thing there, but I will definitely make you do one case study. Today already we've done one, but very lengthy case study. So we will not take up a case study. One more case study in today's class. So till the end of the class time, I will talk about the theoretical topics. But next class, when we meet, as soon as we gather for the class, we will straight away start one case study, 1 or 2 case studies on risk and uncertainty. So if we have to explain the concept of risk or define the concept of risk and uncertainty, how would we do that? Any idea about what is risk and how do we explain that? Risk and uncertainty, how do we explain that? One option is don't know, also is one option. Anyone?
Ma'am, risk is actually measurable, but uncertainty cannot be measured.
Okay. Good point. It is measurable, it is not measurable. But then, if it is measurable, how do we measure? I mean, what is that concept about measuring that? I mean, when
Like,
it is
we can have a calculated risk
okay.
for some cases, but uncertainties are like, for example, COVID, where we did not knew anything about
Yeah.
like what will happen to the economy
Huh.
of the country. Yeah, that is uncertainty.
Yes. See, the fact that it is not known is uncertainty. So, not having proper information is resulting in some kind of a variation from what was planned. See, for the future, there is some amount of planning taken up by everybody, whether it is at an individual level or at an economy level or a business level. There is some amount of planning. See, when there is a variation in the planning, variation in the expected values that are expected, that are planned, if there is a variation in the expected value, that is referred to as both risk and uncertainty. But along with the variation, if the extent of variation or the probability of a variation, the extent of changes uh, can be known, the probability of this variation happening if it is known, or the likeliness of a variation happening if it is known, then we call that to be as risk. But if that is also not known, that variation, the probability or the likeliness of a variation is not known, that's completely uncertain. See, COVID example is the best example. See, a scenario like this would appear in future was unanticipated, unimagined. So it was, see, the variations, even if there is a variation expected also to this extent, to at this magnitude, nothing was expected. So this is uncertainty. So the likeliness of such a thing happening if it is not known is uncertainty, or the probability, even if there is a variation expected also, the probability of such a variation happening also is not known, is uncertainty. So because the probability, the likeliness of such a variation is known, it is possible to calculate. Therefore, risk can be calculated. Uncertainty cannot be calculated because the probability of such a variation is not known. Sometimes even the variation is also not known. Therefore, it is called as uncertainty. Okay. Now, if we, if we can foresee that there would be a variation, if we can anticipate that there is a variation that would happen in future, in such case, what kind of planning can be taken up? What are the tools that are available to deal with that risk situations or uncertainty? Conceptually, there are certain concepts which you have to learn. Then from expected value onwards, these are all numerical topics where we would be taking up calculation of these concepts. I will just explain the concept, but straight away we will not take up a case study on this. Normally, if it is a 2 hours class, I think one case study per class will be sufficient. But today's class is 3 hours class. So if I start again, it will be too hectic for you also to receive that. So the rest of the time we will continue with the theoretical topics, and next class, next Saturday when we meet, then we can take up a case study. First concept is scenario planning. See, what is scenario planning? The concept of scenario planning. See, scenarios are future possible situations that can arise. But how do they understand what would happen in the future? Generally, for scenario planning, the past events are observed. See, from the past events, all those events that are repeated are noted down. See, whatever happened, generally the trend is observed from the data. So from the past data also, when the trend is observed, so out of that trend, we see that those that have a tendency to be repeated are noted down. From these events, the events which are repeated over a period of time, when we observe that, which repeatedly happen, out of that, how many of them have a possibility to be repeated in the future as well, will be noted as a scenario. They have to be first written down as a scenario which is possible to happen in the next period, the future period. That is noted down as a scenario. Once it is noted down as a scenario, then planning will be taken up. See, planning, one straightforward, only one plan A alone will be there is not a situation. So multiple possible plans will be taken up for that expected scenario to happen in the future. So when that is there, so if one plan doesn't work, another plan, multiple possible things that are planned for the future, this concept is called as scenario plan. But what are scenarios? Scenarios are noted down from the past data. Those that get repeated again and again are noted down. From among them, so the ones which have a possibility to be repeated in the future as well is noted down as a scenario. And for that scenario, different possible plans are prepared, so that when they have to face the future at that point of time, they are equipped with how to meet that situation or that scenario. That concept is called a scenario plan. You may be asked to explain about scenario planning theoretically in the case study. So if you are clear with the concept, you will be able to present about what is this concept about that. I mean, the questions may not be in a straightforward manner. Maybe it could be like a conversation between the different levels of management, the hierarchy. Maybe a senior manager wants to have some information about, or he has attended some meeting, so he got to get some information about that, but he was not sure about that concept. So you are the expert at XYZ company, so you are asked to explain this to your senior. So that exhibits your writing skills or your communication skills, your report writing, presentation, etc. So then you will have to talk about what is that concept and what is the scenario, what is the planning for that scenario has to be explained in that particular case. Computer simulation and sensitivity analysis, both of them basically talk about the same concept, but with a difference. When a set of inputs are introduced into the business, do you want to go for a break? I am only talking about myself. I didn't ask you. Would you want to take a break?
Yes, ma'am.
Okay.
Yes, ma'am.
Yeah, 10 minutes. We'll go for a break and then join back. Okay.
Yes.
Don't have to leave that. I will put the recording on hold. As we resume back, then we can also continue with that. Don't have to leave. You can stay here. I'll just put everything on mute and the recording on pause.
Yeah, ma'am.
Okay. So computer simulation and sensitivity analysis. So sensitivity analysis. See, for the output to be generated, a combination of inputs have to be used. When inputs are used, inputs versus we see that this output generated. See, if the inputs are used in a particular pattern, in a particular combination, we see that the output is generated. If there is a change in the inputs, there would be a change in the output as well. So simulation is an experiment taken up to make changes in the inputs. Because of changes in the inputs, the variables that are used, what impact does it have on the output is observed. It is noted down. See, when there are inputs, multiple inputs, see, combination of inputs when they are used, the changes in the combination can be made, the probability changes can be made. So the experiment, if it has to be conducted, when we talk about combinations, that runs sometimes into thousands of times also, 1,000 times also it has to be done. So if that is the situation, manually it may become very difficult to take up this experiment of changing the inputs. So it is generally done with the help of computers. So it's also called as computer simulation. There's a name called as Monte Carlo computer simulation. See, it is to observe what impact would be there on the output because of changes in the input variables. Okay, shows the effect of more than one variable changing at a time and gives a view of the range or level of outcomes. So by taking up this experiment, by making changes in the inputs, what is the output is observed, it is noted down. Among these things, the best possible outcome is a result of which combination of inputs can be understood. Henceforth, it will be applied that this combination of inputs will result in the optimum output. So that's called as computer simulation. Same is the concept with sensitivity analysis also. Because of the change in the input, how sensitive is the output, or how sensitive is the output on account of changes in the input. But there it is one variable at a time would be changed. It's only one variable at a time. But here in case of computer simulation, it's a combination of inputs which are changed and to see what is the impact it has on the output. Sensitivity analysis, one variable at a time, the results are noted down, then the best possible outcome is understood, and that henceforth will be implemented. So before the decision is reversed, what changes are made in the inputs to see that the output is the best possible. Calculates the change that would be necessary in factor. It is only factor, one variable factor, before the original decision is reversed. Okay, that is sensitivity analysis. Both of them basically are the concept is same, but the way it is taken up, here it is one variable, here it is combination of variable. Because this combination runs into thousands of times, it is manually not possible to be taken up. Therefore there is a help of computers which is taken up, and then the experiment is conducted. Then we have quantitative models here to understand what's the impact of the risk, or how risk is calculated, or how decisions can be dependent based on these tools and technologies that are available. We see that one is expected values, one is maximax, one is maximum, minimax required. Who would choose these things depends on the risk appetite of the investors, their attitude towards taking up the risk. Their appetite to take up the risk. So depending on that, so that factor will decide on that factor will decide on which tool to be used. So expected value, it is an average model. So average will be, how is it calculated? I'll just briefly explain. Anyway, numerical question we will be doing that. See, if there are for a given scenario, if there are multiple If there are multiple outcomes, so make a note of all these outcomes, multiple outcomes. After the outcomes, then we see that for each of them, there is an expected probability. So this is one second, I'll just has come. So let's continue. So if the outcome is outcome or cash flow, whatever is that, when it is given, along with that, if the likeliness or the probability is also given, so we would have the probability also given, multiply the outcome or outflow or the cash flow, whatever we call it, into its respective probability and find out the sum total of it. So that is the average, weighted average. So here, in terms of calculating the risk, one tool, one method which is used is expected value method. So considering all the variations, on an average, what is the expected value of risk is this expected values method. Okay, who chooses this? Who chooses this method to estimate the risk is someone who's risk neutral, someone who wants to consider all possible variations, doesn't go with a particular flow of things, who wants to consider every possible variation. But if we talk about Maximax is a tool which is used by optimist. See, when we divide this Maximax, we are dividing this into two parts. First is the maximum, second is also maximum. The Maximax, maximum, when we talk about, we are dividing this into two parts. So the second maximum talks about the returns which are expected. So from the different alternatives, the maximum return is selected. And from among the maximum returns selected out of the alternatives, from among them, one more time, again, maximum will be selected. So this is the attitude of an optimist person. See, they see always the bright things. They are willing to take up any decision because they only perceive the best possible outcome out of that. See, when returns are high, when best possible or higher returns are anticipated, along with that comes the risk also associated with that, which is high. See, we can elaborate that with a very basic example. See, some of the investors in a family also, we generally see that usually the scenario in a family also, we see that the elderly people are more towards saving their amounts in bank accounts, FDs, savings accounts, etc. So that is the attitude we see among the elderly people. Then we see in a family, not necessarily it is the same pattern, but general observation. So the younger lot have keen interest in investing in stock markets or real estate or investing into foreign currencies, etc. So that is the kind of attitude what we see in the younger lot in the family. See, each of them have their own objective behind the decisions which they are taking. So those that prefer the conventional method of investing, that is into fixed deposits or savings account, post office accounts, then NSE certificates. So their focus there is about security. They do not want to risk the investment amount at any cost. So they're happy, they're content with the security aspect of the security of their investment. For that, they are ready to pay the price of getting a low return. See, these methods of investment, we see that the return is not very attractive, very low. But on the other hand, those that choose these opportunities or the alternatives like investing into stock market, real estate, etc. The returns, when there is a return, the returns are very high, very attractive. Okay, but along with that also comes a risk aspect, whereas once when they lose the return, they are uh, very greatly hit by that or affected by that. So which means that the risk is also high. When there are fluctuations, they get affected because of that. Okay, so someone who is willing to maximize their returns, when the return is high, the risk is also high. So Maximax is a tool chosen by um, an investor who's expecting a high return. Along with the high return, the risk is also high. When return is high, risk is high. When return is low, risk is low. So we see Maximin is a tool used by a risk averse person. To some extent as a pessimist or risk averse, or someone who's not willing to take up any risk. So when the returns are low, the risk is low. So with the focus of minimizing their return, the effect what they will be facing is that they will have low returns. So a risk averse person chooses maximum. So first he selects all those alternatives where the return is minimum. From among the minimum returns, the best possible or the maximum return would be chosen. So that is a maximum. Theoretically, this is how we explain, but when we do the calculation, then I think we'll have better idea about how to actually do that. But theoretically speaking, this is by an optimist. An optimist investor goes with, I mean, the attitude. What did I do? Sorry about that. The return is high, risk is also high. So this is by an optimist person. This is by a risk averse person. So someone who's averse towards taking up any risk. Minimax regret is definitely by a pessimist. Okay, so a pessimist sees the negative things in all situations. So Minimax regret is a pessimist always looking at what is that he would be foregoing by not choosing that alternative. So all that which he would be foregoing is what is focused. Okay, so when would what to what extent would he be regretting? His focus will be on what would he be regretting. See, when alternatives are available, one alternative is chosen, the other alternative is foregone. So with that foregone alternative, the benefits associated with that alternative are also foregone. So whatever is foregone is a regret. Okay, it may not be the best, but yes, some benefits that are associated with that cannot be availed, therefore there is regret. So whatever is the maximum regret is first is calculated, and in a way to minimize the maximum regret is the focus. Now who looks at the regret part? Only a pessimist looks at the regret part. So this is a tool chosen by a pessimist, selects the alternative that minimizes the maximum regret. So first to calculate what is the regret. So there is a regret table which we have to calculate, which we have to prepare for different alternatives. And from among the regret, the maximum regret, but once it is noted down, go with a scenario where the maximum regret is minimized. Now theoretical explanation is this, but unless and until we work out a case study or a question, we will not be very clear with that. But today, as I mentioned, today I will not do a numerical question or a case study question. I will explain for the rest of the time. I will explain about the other concepts here. Okay, we will discuss about some part of budgeting, and then we can wind it up. But next Saturday when we meet, next Saturday we will straight away start with the case study.
Ma'am, which text you are referring to, like ACCA or SEMA for APM?
Uh, what is your paper? APM, no? State away. So APM text.
Yeah.
But MRB
Uh,
and all, it is a combination. This is a straightforward APM paper, no? So there is no
means ACCA
combination.
one.
So this is ACC. And the
Okay.
practice kit also is APM practice kit, exam kit only has to be followed. That is sufficient. In fact, actually, that has covered all the topics in detail. Case studies are also there, in detail covered. So I don't think you will require any other material apart from that. Kaplan, BPP, if you have both of them, well and good. Otherwise, Kaplan, I think it should be sufficient.
Okay. Okay, ma'am.
Recently, I've attended a webinar on see the change in the examination pattern, because 20% of marks are now going to be awarded for professional skills. So there the tutor, the presenter was also highlighting extensively, if the student practices from the exam kit, that will be a great help. Because otherwise there are different opinions that, see, you should know the concepts, and then because these cases will not be repeated, so what's the point of doing these cases, is one argument I have heard. But I always very strongly believe that when you practice from the already given exam questions or similar amended questions, it gives us an idea as to how to present the answers. So when you are preparing for the examination also, I think you should read through the answers given there in the exam kit. Um, New ideas come when you read through that. When you read the examiner's comments also, you will understand to what extent you have to cover. Of course, the answers that are given in the exam kit are in detail, elaborate, covers every bit of the that particular topic. See, if the marks allotted are, let's say, only 4 marks are allotted, maybe you will have to write only 4 points, let's say. But the answer kit will give you, if there are 8 points, all 8 points will be given. So not necessary that all that entire content in totality you have to take into consideration. In total, you have to take, no. Depending on the marks allotted, you will have to also either elaborate or condense or anything. But that will be a better guide for your preparation for your examination. Okay. See, budgeting is not a new concept which is learned by the students. See, as part of basics, that is performance management, we've learned. Then some part of, I don't know whether in your program you learn about management accounting, but budgeting is, in any situation, it is not a new concept. You all know that. Budget is a financial plan. Um, the process of preparing budgets is called as budgeting. Why are budgets prepared? So that they can be a control. So for better control, Okay, so budgetary control is the control that can be exercised because budgets are already present. So on comparison of how the actual performance happens, on comparison, the variations can be known and those variations can be corrected. That's how control can be exercised in an organization. That's called as budgetary control. So what are the objects of budgeting? So why do we have to learn budgeting right now in this part, I mean this paper, since this was already covered? See, it's nothing new here, but one best tool here to measure the performance is budgets. See, when plans are already present, financial plans are there. See, when the performance has to be measured, the actual performance will be compared with the budgeted performance, and variations are noted down, and then those variations can be corrected. So, for that reason, budgets are important that we study here once again in APM. But because the preparation of budgets and then the testing of budget preparation, everything was earlier done as part of management accounting, as part of to some extent in PM, etc. The preparation of budget may not be the highlight point here in APM. It is advanced performance management. So budget would be already prepared and provided to us as an appendix. We will have to learn how to comment on the budget, comment on the performance, whether it is an appropriate budget or not. Critical analysis, whether the budget has the right components in it or not. So that aspect, from that focus area, we have to highlight about the topic of budgeting. Budget preparation is has a very little chance to be tested in the case study. But if we already prepared budget is there, we will have to prepare an analysis about the performance. Performance analysis can be done. Comparison is in certain other situations, talk about whether this is an appropriate budget. So that's a critical analysis. So maybe the variables that are used in the budget are not appropriate, the measurement is not appropriate, some more items can be included in the budget, can be talked about. That is how we will have to take it up. See, what are the objectives of preparing budget? And the purpose of preparing budget, the objectives can be easily achieved because constantly there is comparison about how the actual performance happens, and that is compared with the budgeted budgets, and then the any kind of a deviation that can be corrected. I always tell this example to students to remember in the context of budgets, the application of Google Maps app. See, I mean, generally give this example, ask them to remember this. So that is an easy way to remember. See, Google Maps app is an app where we generally use when we are set out to go to new destination, new places where we are not sure about what's the route. See, on the way, if we want to refer to whether we are on the right track or not, then what do? We open the app and then check if we are on the right track. The app indicates that we are on the right track. But let's say if we have taken a wrong route, then app also suggests what is the route you have to take so that you can get connected back to the right track. That also is a suggestion given by the app. So here, in case of budgeting, the process of um, I mean budgetary control, the process of comparing the actual performance with the budgeted. See, the route map is already there in the app. Now, when we are implementing the plan, at that time the actual implementation is compared with the plan. If there are deviations, measures are taken to correct those deviations, get back onto the right track. So that is a possibility with the app. So remember that. So the whole concept is very clear to us. So here, in case if even if there are any kind of deviations, also those deviations can be corrected when budgeting and budgetary control are implemented in an organization. So it ensures objectives are achieved. It compels planning and communicates ideas. Okay, so planning is there in place. It compels planning. So when planning is there, the plan would be communicated to everyone, because they are the ones, the employees in the organization, the people at different levels of management are the ones who have to actually implement these plans. So the plans are also communicated very clearly. Now that the plans are communicated, everybody has an idea about how it would be implemented. So there would be automatically coordination also happening, coordinates activities, and then because the resources that are available has to be allocated, so we understand what has to be achieved, what is the way it has to be achieved, so accordingly resources also can be allocated appropriately. Then if at all, if the performance is not up to the mark, up to the standard, then they can also be made accountable. So establishes accountability and control. Then it evaluates performance, and it motivates. So see, because the comparison talks about comparison when it happens, so it is a constant continuous process. Monitoring is a continuous process, so they note down the performance of the employees. So generally whenever performance is measured, that is connected to rewards. When they are entitled to rewards, when they are when they receive rewards because of their performance, that is a motivating factor, to perform better in future. So these are the purposes, or the purpose behind having plans or prepared budgeting implemented in an organization. Then we see different types of budget. This is also not a new topic, which was earlier learned in PM, MA, performance management, because you've already learned. So you would be knowing that CPM, I think the paper title is called as CPM, corporate, I don't know, performance management, something. CPM, I think, is the paper. Okay, types of budgets. There are different types of budgets. Normally, how is budget prepared? Budget is prepared based on the past data. See, when the past data is observed, or past budgets are considered, um, the same is adopted for the future as well. But see, some changes would be anticipated for the future. Considering the changes, some incremental changes that are made to the budget, and adopting the past budget, we call that to be as incremental budget. Adopt the past budget, make some incremental changes, we call that as incremental budget. That's the that's a regular practice. But there are disadvantages with incremental budgets. See, if at all, if there is any kind of inefficiency in the past budget, those inefficiencies will continue in the future. Any excess cost which is included into the budget, because the same base will be taken, few changes will be made. So those inefficiencies, those excess costs, those wastages also will be continued to be included in the future budget. So control is not effective in case of incremental budget, but the advantage is it is easy, simple to prepare, less time consuming, etc. So the disadvantage of no control over cost, inefficiencies continuing in the future, etc. So for that reason, see, that is a disadvantage, that's a limitation with incremental budget. So as a solution to that limitation, we see another type of budget called as zero based budget, which means that nothing from the past is assumed. So the base is taken as zero. The base is taken as zero based budget, which means that without depending on any past budget, everything is prepared fresh. So all the variables that are included in the budget are taken up afresh, and every item that is estimated is done with thorough research, and also when they are included in the budget, a proper justification is also included as to why this is the right amount. Okay, so that way any kind of inefficiency which was included in the past budget can be eliminated, wastages can be controlled, etc. So all that is All that is possible with zero-based budgeting. The main disadvantages is it takes a lot of time to prepare such a budget. Extensively research has to be taken up, time consuming, costly. See, efforts and resources have to be put in to prepare such a budget. But the advantage is that, see, effectively the amounts can be estimated and then included. So that is zero-based budgeting. Another budget is a rolling budget. Okay, theoretically, let's look into this one. What is this concept of rolling budget? See, budgets are prepared for the future, but the future may not be evenly the same uh, for the entire period. Whatever is the time period for which the budget is prepared, evenly the period may not be the same, or what is expected may not be the same for the entire future. That is. Because of technological changes, things may change very quickly, very fast. Things may change. So what is anticipated as on today may not be applicable. Maybe it may be applicable for the near future, but for a distant future, it may not be applicable because of the technological changes. Another reason is seasonally, when there are changes for an entire period, let's say a year, anticipating that uniformly the same thing would happen in the future may not be a situation. So seasonally, as the seasons change, the expected values also change. So that is one thing we see. So the purpose of preparing a budget is to ensure that the actual implementation or actual performance goes according to the planned performance. But see, if the plan is not applicable for the future, the purpose of preparing a budget is of no use. The purpose would not be served. So therefore, there is a solution for that. Instead of taking the long period of time at one go, that long period of time is broken down into short periods of time. So 1 year can be looked into as 4 seasons or 4 quarters, or 1 year can be looked into as 12 months. Likewise, I mean, a long period can be broken down into short periods. For example, let's for better understanding, let's take a quarter period's time broken down into 3 different months. So we can consider these time periods as, let's say, the first quarter of a calendar year, January, February, and March. Instead of having the budget prepared for one quarter, it can be prepared for 3 different months called as January, February, March. So this, see, uniformly, things may not be evenly the same for the entire quarter. So that's broken down into 3 months. So each month, what would be the scenario can be individually assessed and then estimated and included in the plans. So now once the time period starts and then the first period expires. So when the first time period in this budget expires, so the budget is now no longer applicable. So the budget for the first time period will be dropped, and another similar time period, let's say another month, in this sequence it would be April. So for the next month, a similar time period, a budget is prepared and it is appended, if it is added to the existing budget. So at any given period of time, there would be a budget prepared for that defined periods of time. So if we consider 3 months, in this example, 3 months, so 3 individual months. So at any given point of time, there would be a budget present for 3 different months. See, it could be quarters, it could be months, it could be in any pattern, it could be there, it's seasons, cycles, etc. Okay, so once one period expires, the budget for that period is dropped and another period for which the budget is prepared and added to that. So there is a continuous effort to update that and prepare and append the budget. So here, this kind of budgeting will accommodate all those possible changes. So keeps continuously up to date by adding another period when the earliest period has expired. That budget will be dropped and another budget will be added. Okay, so that's called as rolling budget. So here the changes that happen can be accommodated into the budget very comfortably. So that's a rolling budget. Okay. Fixed budget is, see, one fixed level of activity at which a budget is prepared. We call it as fixed budget, fixed or changed. Budget prepared at a single level of activity. The disadvantage with fixed budget is, see, let's say the activity level is estimated to be at 50,000 units. So future as it is uncertain. So very precisely the same level of activity to happen in the future. See, it may happen, it may not happen. If it happens, yes, the actual performance will be compared with the budgeted activity level, things are fine. But let's say if it is not the case, if some other activity level happens in the future, comparison is not possible because we cannot compare two different activity levels to evaluate the performance. So the whole purpose of preparing budget itself will not serve the purpose. Therefore, another type of budget called as, I will explain this and I'll wind up the class here. Activity based budgeting, I will explain it to you in the next class and then we can continue further. Flexible budget is a budget wherein in a budget, multiple levels of activity at which the budgets are estimated and included. So when the actual happens, according to the actual activity level, the appropriate activity level from the flexible budget will be taken up and the comparison happens. Okay, so that is called as flexible budget. It is not fixed at only one activity level. And then we can also say that even in spite of including multiple activity levels, precisely they may not have estimated the activity that would happen in the future. So when the actual activity happens, that may not be matching with any of the activity levels which are included in the flexible budget. So in such situation also, the budget can be revised based on the actual activity level. So when the budget is revised based on the actual activity, then also we call that as a flexible budget. Including multiple activity levels in the plan is called as flexible budget. Another thing is revising the budget based on the actual activity levels is also called as flexible budget. See, this will help in comparison of the actual performance with the budgeted performance. So that would be easy to compare the performance levels and then make any corrections or corrective measures can be taken up so that the performance is up to the mark. Have a conceptual knowledge about this. So it may not be extensively tested there in the case study pattern of exams, but we never know what question can appear in the exam. So conceptually, you have to learn about these things. We still have to learn about certain other concepts about budgeting, and then some kind of a dysfunctional behavior related to budgeting also. I will take you through that after a while. So next week, next Saturday when we meet, we will start with the case study and then continue with these topics. Okay. Any doubts?
No, ma'am.
Thank you, ma'am.
Yeah. Anyone else joined? I'll take a photo of those who are present because I have to mark the attendance. Anyone else apart from this group and these students joined?
No, ma'am.
Mohan was.
Mohan, yeah. Mohan also was there. That's right. Okay. Okay, then meet you next Saturday. Okay. Good day and happy weekend weekdays.
Yes, thank you, ma'am.
Okay. Meet you next Saturday.
Thank you, ma'am.
Thank you, ma'am. Bye.